All right, good morning, everyone. Well, thank you very much for joining us. This is another one of our weekly editions of the Real Estate Backstory. We do this every Monday morning at 9 a.m. And I'm very glad you can join us. My name is Alan Richardson. I'm the managing broker here at Max One Realty and Realtor Partners. And this is our Real Estate Backstory, where we kind of try and expose the soft underbelly of the real estate world, what's going on in the Atlanta real estate market, things happening, just to kind of get you started off on your week and how everything's going. So we started this right after COVID, and it's still rolling good and doing really good. So you can catch us here on Facebook. We're also on realestatebackstory.com, or you can find us at max1.rocks/backstory. So I hope that you will join us every week, and I hope you get some value out of that. So that being said, let's kind of jump right in this week, because I got lots of things to share with you. So first thing is that there are new rules out for PPP loans, and they've opened up funding for smaller businesses and sole proprietorships, which a lot of real estate businesses are. You don't work for your broker. If I am your broker, you don't work for me. You are your own small business. And so that being said, there are some opportunities if you've had financial hardships. Now, for a lot of real estate agents, this has not been a rough time in the real estate world. But by the same token, there are some folks that have had to care for elderly or do different things, and they may have had issues with the coronavirus. And so if you have had problems, and if you could use some assistance, the PPP loans are forgivable, but I want to throw a little caveat out here, okay? I'm not an accountant. I'm not a business manager. I'm not telling you what to do. I'm just letting you know that this service is out here. And for a lot of real estate businesses, a lot of you will be eligible for this kind of thing. Now, you can find more information at sba.gov. And so this is where you want to go. And in there, President Biden announced important changes for businesses with less than 20 employees. You can click on that link and you can find a lot of information about whether this might be a right program for you, and if this is something that can really kind of help you out and kind of get you up and running if that's what you need to do. But again, please don't call me to ask about how to do this program, because that's not what we did as a company take advantage of the original PPP because our business suffered in the very beginning. But we're not seeing it now. We've had about 7 months of just destroying the previous year in sales. And so as a brokerage, we're doing really, really well. It's been a great time. We're doing a lot of transactions, that kind of stuff. So we're not taking part of any additional PPP because we don't need it. But if you do, check that out. But again, it's not my gig, and so I'm not trying to come across as a subject matter expert on this. I'm just letting you know that it is out there, kind of thing. I want to jump right into supply versus demand, because one thing that we're seeing a lot more come out right now is that, is there a housing bubble? Is there a housing bubble? What's going on with housing? If I buy now, am I in deep? Why are we at where we are right now? And so what I want to show you first is that, there's some new data out which shows supply versus demand. Oh goodness, from July of 2015 all the way up to 2021. And you can see this is what our total inventory of homes in the US has been for the past 5 or 6 years, kind of thing. And you can see that as of January, we had our lowest inventory levels ever. And so in real estate, and especially in residential real estate, it's supply versus demand. We have a lot more demand than we have supply to fill it. At the same time, we also have our millennial home buyers that are moving into the home buying market. Our average millennial is 28 years old right now. And the largest segment of millennials is in the 26 to 30 age range. And the first time home buyer age is 33 years old. And so all of the vast majority of millennials are moving into the first time home buyer range right now at the same time. Plus we have historically low interest rates, but we are going to talk a little bit more about interest rates, because even though we're talking about historically low interest rates took a big jump last week. But let's look at what really is kind of going on in there as well. I mean, as far as overall in the whole real estate world kind of thing. So existing home sales ticked up about 0.6% in January. And some people will be like, well, that's not very much. Okay. when you're talking month over month, when we've been running heavily up, that doesn't seem like much. We're almost 24% over last year for January. We've moved into it. Average home prices on the nation is about 14% higher. Now, how about here in the South? South grew about 3.5%, 3.2%. I'm sorry, which is 25% up over last year, and the median home price is up 14.6. Now, I know that 14.6 is not a sustainable number for home price appreciation. We are going to start hitting in roughly March, April, May. When we start hitting, that's when we really saw a lot of the home prices jump this past year. Once we hit back to that point, we're going to start seeing much more modest increases and leveling off. But for the next few months, we'll continue to see these high numbers as we move forward, kind of thing. But it will taper off. We do need to see home prices. I'm not going to say softening because that's the wrong word. But what we still need to see is that we can't maintain this 14% over last year every single month, because nobody's making 14% more than they made last year at this time. So we have had a big jump. It was highly driven by COVID and coronavirus, the whole 9 yards. But that's not going away. We're not going to see home prices drop, but we should start seeing much less modest increases over prior year. The majority of homes are now going under contract in less than 2 weeks. That's overall nationwide averages. But right now, over 52% of homes went under contract within 2 weeks. So when you take a minute, first of all, think about that. So if you have a listing and it hasn't gone under contract within 2 weeks, why? Because generally speaking, if the reason is going to be price. Right now, a lot of our sellers are thinking that they can just go more and more and more. And sometimes you can. Just being real honest with you, but what we're seeing is that the homes that are reasonably priced compared to the other comparables in the market, those are the ones that are kind of moving up. Right now, one of our most favorite pricing strategies is to just price it right where the neighborhood is, and then we're seeing that go over. We've seen it go over $10,000, $15,000, $20,000 over average listing. Whereas if you list $20,000, $30,000 over the average listing price for a neighborhood, you don't get nearly as much traction and that kind of thing. So right now, that is kind of one of our favorite pricing strategies with the current market about where we are right now. But speaking of the current market and how things are looking, let's jump into mortgage rates, because mortgage rates last week took a big jump kind of thing. 30-year, the 30-year rate, FHA went to 2.97. Now, if 5 years ago you had said, interest rates are 2.97, I'd be like, that's impossible. There's no way that's going on. But when we go from a 2.6 to a 2.97, all of a sudden people just start freaking out. And understand that I'm going to tell you that you should go and have your clients lock their rates as quickly as they can. Interest rates are not going to we don't see interest rates going down. I really feel that we're going to be kind of a steady flow into the threes, mid threes, and maybe even low fours by next year kind of thing. So we are going to start inching up. It's not going to go down anymore. And so, we have seen where, all in just that week, because of the jump in interest rates, mortgage applications are down about 11%, purchases are down 12%, and refis are down 11%. So, probably the biggest thing that I'm really expecting is that the refi market is really going to probably dry up as interest rates continue to increase. That's where it's going to be really hard for our partners in the mortgage business kind of thing. But we still have a ton of demand, so I don't see that that's going to really affect us. But if we let our clients not lock their rates in, that's really going to hurt their buying power kind of thing. Now there are time frames on there. We've got to be very aggressive about what we're doing with it. But that being said, I don't see this going down. Now the Fed Chairman Powell, he was in front of Congress this past week, and he said basically, look, we're not in any interest or any hurry to raise the interest rates. What they're really looking at is unemployment, as well as what's happening with oh my goodness, you ever have a day where your brain just stops working? Inflation, that's the one. So the Fed is really highly targeting what's going on with inflation as well as with unemployment. And right now, even though the employment rate shows about 6%, the Fed really feels that truly it's about 10% because about 4% of people have just kind of given up on looking at all right now. So until they feel the unemployment rate is down and the inflation is really just started kind of going crazy, they're really not looking at raising interest rates. Now, there is a slight correlation between interest rates as well as lending rates, but really what happens is that for mortgages, the mortgage interest rate follows the 10-year treasury. And if you just kind of lay out the 10-year treasury right next to the current interest rates, you'll see that they go hand in hand, but they are buying a lot of those notes. And that's why that continues to stay down. Now, one thing that they are keeping an eye on, everyone is keeping an eye on, is what's going on with debt in the US. Because like when we had the last housing crash back in 08, total household debt was really, really high. And what we're seeing here is that, yes, mortgage debt actually is actually down a little bit. Home equity line of credit. I mean, this is all compared to a year ago. Where are we in as far as debt goes this year versus last year and versus like, back in the 08 area kind of thing. And so mortgage debt in just a year has actually dropped a lot. Home equity line of credit is down significantly from 0.85 to 0.59, which means that we're less leveraged. Nearly a third of our homes are owned outright in the US. Student loan debt, this one is a skewed number because it shows 9.2 versus 2.7. And really, so much of student loans have been wrapped up in the coronavirus protections that doesn't apply. Auto loan debt is down. Credit card debt is down. All other debt is down. So overall, we're down about 1% as far as total household debt, this year versus last year. And that bodes very well for our economy, and as well as the housing market kind of thing. So mortgage delinquencies for the first time are down 6% since March of last year. We still have some folks that are definitely going to have some challenges with that. But that being said, the Biden administration has just announced that homeowners are eligible for 18 months of forbearance. Now, they were supposed to have it in by yesterday. And they are continuing to expand this out. I see where they're continuing to expand both forbearance as well as eviction moratoriums through the end of the year is kind of my feeling. But we'll see how that kind of runs because one thing that just happened this past week is that there was a Texas judge that found the national eviction ban is unconstitutional. And so I know that the Biden administration is going to be fighting that. And for us here in real estate, that this is a very, this is a tough thing for us. And what I mean by that is I think it's pretty clear that the folks who are hit the hardest by the coronavirus have been renters. For the most part, a lot of folks, if you were able to buy a home before the pandemic, you're able to buy a home now. The folks who are renting have been the ones who have been hit the hardest. That being said, who owns most of the rentals in the United States? Well, 53% of renter households live in 1 to 4 unit properties. Single family houses account for about 27% of missed rental payments. Those folks who own those rental houses, the vast majority are Bob and Sherry down the street kind of thing. These are smaller people that own a rental property, and those folks are really kind of having a pretty tough time with it because most of the there are rental evictions, so you can't kick someone out, but you can't make them pay either. Now, at the end of the moratorium, they are going to get left with a bill, and because at the end of the moratorium, you are still supposed to pay all your back rent. But I think we all kind of know that that's kind of pie in the sky. Now, Fulton County is rolling out a new renters assistance program right now. So if you're in Fulton County, if you know of anyone that needs some help, they can find that in the Fulton County government website, that kind of information. But this is overall, the whole rental issue about evictions and all that, it's tough because on one hand, you really care about people and, you wouldn't be in this business if you didn't. And And so, I don't want to know that people are hurting and people are getting kicked out and that kind of stuff. On the other hand, I've got friends that are losing their shirt because they still have to pay their mortgages and they're not being paid any rent. So one good thing about most of the rental assistance programs that are coming out there, and if you do have someone that needs a rental assistance, you have the federal government that has some rental assistance, and then like I said, Fulton County, a couple other counties are having that as well. And what they're doing is they're making payments directly to the landlords, and as well as to the utility companies. So if you are having a hard time, they're not going to pay you cash. They're going to pay your landlord, or they're going to pay your utility bills. Now, some folks will be like, well, they're going to pay them, I'm not going to worry about it. At the end of this, you're going to, one concern we have is that all these renters who are behind on missed payments, at the end of all this, they are going to get left with a hefty bill that they don't have to make up. Or if they do have to make it up, it's going to impact their credit long term. And so it has the potential to really hurt their home buying opportunities for the future. So also, first-time buyers are moving away from FHA. We've seen more FHA buyers moving down since, in a long time kind of thing. 59% of first-time buyers obtain conventional loans versus 24% of FHA. So we're seeing that happen. And honestly, I think it really is smart. If you have a buyer that, like if you can choose between FHA and conventional financing, you can even find most of your conventional financing is at 5%, but you can find some at 3%, same as FHA. But with conventional, you're going to have lower interest rates, generally speaking, and you're going to not have the mandatory, oh my goodness, again, brain stopped working kind of thing. So mortgage insurance. So you're not going to have mandatory mortgage insurance on your conventional loans like FHA has. And so FHA is not nearly as appealing because we'll continue to see credit scores are continue to increase. And if you've got good credit, it really makes sense for your clients to move into conventional financing because it's better off for them. Once they hit a certain, once they hit 75% equity, they can get rid of their mortgage insurance, and as well as they're probably going to get lower interest rates. We're seeing lower interest rates on conventional loans than we are in FHA. So the report on durable goods came out this past week, and so December was up, January was up 3.4, which is way more than what they were really expecting. But we're going on 9 months of increases on durable goods, tools, appliances, cars, that kind of stuff, 9 straight months. And so that's very positive for our economy and where we're kind of going with that. At the same time, consumer confidence really shot up again. I say really went up by 2 percentage points, but consumer confidence is back into the 90s. And that's a really good thing overall for us as a nation. I think people are feeling a little bit more optimistic, and that's a really great way for us to be. Unemployment at the same time, jobless claims fell to 730,000. And that seems like it might be a really good thing. But we got to understand that we also had all this stuff happening in Texas last week where people were flooding and dripping water out of their ceilings and freezing. And so I do think that that's probably going to go back up. We're continuing to see the unemployment claims are staying pretty high, and I hope that we see this number continue to decline. But for the past 4 or 5 months, labor is really, unemployment has not been doing that great, and so we want to see a more drastic reduction in that, and hopefully as more of the vaccines come out and as COVID kind of recedes, we're going to see more and more of that. Chase also has released a home buyer grant program for here in Georgia. Now, they have it in all 50 states, but I'm only interested in the one in Georgia. And so if your buyer is interested in using Chase to finance their home, Chase has a home buyer grant program, which is basically $2,500. It has to be located in low to moderate income census tracts. And so you can find all that on their website as well. But they don't require homebuyer education, but they do require that they have to meet certain income requirements and that kind of stuff, just like you would on any, on any program like that. It would be the exact same kind of thing that we'd have to deal with. So, new construction pricing right now is running $24,000 higher than last year, and that's not going away. right now, we're seeing labor pricing going up because there is a shortage of construction labor. At the same time, building construction costs, building materials cost is going through the roof. In the past 3 months, we saw in softwood prices, we saw a jump of nearly 100% in 3 months on softwood prices, as well as we're having some just severe shortages, and it's those shortages that's driving some of those other pricing. If you're going to try and build a house right now, we just tried to order some windows and they're 4 months out. And so as long as you're okay waiting 4 months just for the windows to be able to dry in a space, that's a pretty tough call, because we're going to have a lot of houses sitting there with no windows. If you haven't ordered them now, you're not going to get them for 4 months. They're drastically behind. And it's not just windows. We're seeing that on a lot of our building materials. So until that kind of comes in, we're seeing that where home pricing on the new construction side is continuing to go up. Right now, the exact same home last year that you're buying today is around 25 grand more, really $25,000 to $40,000 more for the exact same house. Now, in the builder's defense, a lot of that truly is in the cost of what it is for them to get these materials. But I'll also be honest about it, because it ain't all there. So some of it is there because at the same time, a lot of our new construction companies are having record profits. And so that only happens if you're really making something a little bit more on top of that too as well. So I'm just trying to be keeping it real here kind of thing. All right, also in the housing industry this past week, one thing that came out is that here in the Atlanta market, Zestimates are now gonna be their iBuyer offers. And so that's kind of a big change for Zillow. I have to be careful here. Overall, I don't agree with a lot of Zillow's practices. I'm not trying to say anything bad about Zillow. Zillow, please don't sue me. All I'm saying is that, a lot of things that Zillow says, they turn around and do the opposite. I still remember when Zillow said, we'll never be a brokerage. Yeah, okay. So, right now, Zillow is moving into the iBuyer side of things, as we all know. But now Zillow is taking, there's Zillow portal, and now all Zillow Zestimates will be their iBuyer offer price. And so that is kind of a shift. In the past, we in the industry have kind of made fun of Zestimates. You're like, Zestimates are never high, Zestimates are never low, they're just always wrong kind of thing. And I don't necessarily disagree with that. On average, they're about 5% off, I think is what we kind of see. And while you say, well, 5% doesn't seem much, well, a $400,000 house, that's 20 grand. Really, it's 40 grand, because it could be a swing either way. 5% either way could be a swing of $40,000. So that could be a lot of money. But Zillow has finally started moving into what they call profitability, but not really. Zillow started showing a profit on unit economics on how much they're making on an iBuyer for the first time. But that's before you actually put in what they're actual, like, that's just if you just took the house less the repairs, less the sale price. That's not taking in any of their labor costs, any of their operation costs, none of that kind of stuff. After all that, they still kind of lose money. At the same time, we also had Redfin come out this past week, and Redfin, luckily we haven't been fighting with the Redfin iBuyer program here in the Atlanta market yet. They're still heavily in the West Coast. At some point, they will be here competing with us. I'm sure of that. But one of the there was a little slip this past week. There was an interview with the president of Redfin, where he revealed that iBuyer, Redfin and all the other iBuyers in the Atlanta market in 2019 paid an average of 3% for the buyer's agent. In 2020, that came in at 2.5%. And so we're seeing where the iBuyers are making more money, and they're making more money on our backs. And that really aggravates the daylights out of me. It's a nice way of putting how I really feel about it. So, this is one where, we are at war with the iBuyers, whether you choose to admit it or not. I believe in working with them where it benefits my clients and where it's the right thing to do. But understand, folks, that we're dealing with a competitor that wants to change the way that houses are bought and sold fundamentally in the United States. So this is not Well, it's not a fun thing to talk about. And it also kind of seems like we are kind of facing an uphill battle. But part of that is, we have to be smart about how we're dealing with the iBuyers and what we're doing with them. The only reason why iBuyers really succeed is because we're not doing a great job of communicating, generally speaking, kind of thing. Because there's a recent study done. I'm going to share that with you as soon as I can figure out where my share button is. So, so you can see that sellers choose buy before you sell offers 5 times more than iBuyer offers. And so what we're seeing is that one of the great ways to kind of fight against iBuyers is to use some of these bridge programs. And so bridge programs such as Knock, Easy Knock, Homeward, Ribbon, these are programs that will allow your seller to sell their home or to basically finance their home, buy their new home for cash, and be able to beat out the iBuyers. So OfferPad, Zillow, Open Door, Redfin, they're all trying. They're in trying. When you compete against those guys in buying a property, one of the biggies that they have is ease, speed, but you're paying for that. Generally speaking, not generally speaking, always speaking. There's a cost that goes in that, and so using some of these bridge financing companies can help your buyers if they have a house to sell. So Knock, Easy Knock, Homeward, and Ribbon, they all help deal with selling the home after they buy their existing home and get in right away, kind of thing. And so that really is one of those tactics that we can use to kind of fight against the iBuyers at the moment, kind of thing. So consider that. All right, I want to chat really quickly about how we're going to get more stuff done, because there is never a time when you're like, gosh, I have so much more time today than I had yesterday, or things are really easy. I want to be able to get all this kind of stuff done. How do you get more stuff done with the time that you have? We have to be smart about our time management. So I want to go over 6 practices that are going to help you really get more done in the time that you have. And so the first one is you need to have a morning routine. You need to have a way in a routine that you follow every day that gets you going. Do you read the news? What is your morning routine? Working out, the whole 9 yards. So having a true morning routine, saying your prayers, of affirmations, that kind of stuff, and kind of gets you set up and started the right way. I used to poo-poo affirmations and kind of like make fun of them. But really, it's about what are you putting into your brain? Because if all you're putting into yourself is negativity and just blah, 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 blah. Well, that's how your whole day is going to be. My daughter sometimes wakes up grumpy, and, I say to her, if you want to have a bad day, you choose to have that. And so having that morning routine where you're filling your head with the right kind of stuff is a great way to get you started. Number 2 is to block out time for your most important tasks. A lot of times we want to check things off a list, but we're not doing the really important things. We need to spend the bulk of our time on our really important tasks. And that runs right next into the number 3, and that is you need to combine your to-do list with your calendar. Because what happens for a lot of folks is they take their to-do list and every day is just an extenuation of today's to-do list. So here's my to-do list today, and then I don't do any of it. So I just carry that to-do list over with me to tomorrow. No, you need to combine your to-do list with your calendar so that you can, and put down there what you're going to do on what days and that kind of stuff. That helps you get your stuff done. Next is to break your calendar down into minutes, not necessarily just hours and days. Yes, we want to block out larger segments, but we also sometimes have to break our calendar down so that we can focus on what we need to get done during a particular time frame. Number 5, only check email 2 to 3 times a day. I know that's hard, but a lot of folks are now just checking email once a day. And in the real estate business, I know that that's really, really challenging, depending on if we got contracts coming in, that kind of stuff. But you should also be scheduling time on your calendar to handle email. if I don't, you have to keep up with email, because if you don't keep up with it, it just starts blowing up in your world, and then you get all behind. But you have to have, that needs to be either part of your routine, how you're going to deal with that. That has to be built into time on your calendar. And then the last one is that you have to take care of yourself. You have to practice self-care, what you're going to do and how you're going to stay at this. You have to block out time with your family. You have to, when I say block out time with your family, you have to schedule. Some of us need to schedule time with our family. It's very important that we do that, because if we'll block out time for our family, then it doesn't bother us to go and put more time in at other points in our business in order to get things done. I love to work harder during certain times so I can enjoy other times better off later on, kind of thing. So I'm just going to wrap us up here today with our CE classes today. Now today there also is two of our wonderful agents, the Kirks. Bobby and Shannon Kirk are going to be on Masterminds, and you can find that on Facebook as well. Mastermind Mondays on there, and so they're going to be interviewing, and they're going to be going over how they sold over 110 homes over the last 12 months. And so it's great to be able to glean some amazing information from two just top-notch agents that we have, and I am so blessed to be able to work with. Also on Wednesday, we have Mortgage 101. That's going to be by Nancy Barlow, is going to be teaching Mortgage 101. And then on Thursday, we have Introduction to Transaction Desk. Greg Epps from Georgia MLS is going to be going over Transaction Desk. And if you aren't up on Transaction Desk and you're not comfortable with it, please jump into that. Next week, we have a ton of CE classes coming up. I'm teaching RPR. We have fair housing, a bunch of stuff coming up next week. So we'll have a ton more CE classes coming up next week as well. And then after this, if you'd like some me time here with the brokers, please join me at max1.rock/chat. And so I'm always online right after there. And if I can be of any service, please let me know. So I hope you guys this was helpful. Hope you have a very productive week. And if I can be of any service, please call, text, smoke signals. I answer it all. Peace out, y'all. Have a great week.